Welcome to another ASUG Partner Webcast. My name is Susan Rebolletto, Membership Support Specialist here at ASUG, and I'll be your moderator today for this event. I'd like to thank everyone for taking the time to join us for this presentation. Today's webcast is being recorded. The link to the recording and the accompanying slides will be posted to the ASUG website, and all registrants will receive an email with the link to those materials. I'd like to remind our audience members that you can submit your questions at any time by clicking the purple Q&A button at the bottom of your screen. Today's webcast is titled Year-End Steps, Steps and Considerations for the Year-End Closing, and it is brought to you by ERPfixers. And now I'd like to hand it over to Paul from ERPfixers.
Thanks, Susan. Thank you, everybody, for attending this webcast. I'm going to take you through about 30-ish slides talking about year-end steps, and then I'll leave about 10 minutes at the end of this for questions. So first of all, what is ERPfixers? We are a platform of about 1,000 consultants, mostly freelance consultants that specialize in most of the SAP modules. If you want to know more about the company, please visit our website, ERPfixers.com, or contact us on info@ERPfixers.com. For a speaker bio, I'm the only speaker on this webcast. I've worked with SAP since 1997 in both North America and Europe. I specialize mainly in the FI and CO modules, but also in some of the integrated areas, and I've dealt with various industries. I actually started off doing your typical implementations, blueprint to go live and support. More recently, I've been doing optimization, so I'm going back into companies who have had SAP for several years to see how we can improve the use of SAP to satisfy their business requirements. I have a couple of books I've written, which 100 Things to Know About Financial Accounting and Reconciling COPA to the General Ledger. So for an introduction, I thought this would be a good webcast to have, especially at this time of the year, because over the last few years, I typically get questions from clients about certain year-end tasks that they could have done previously but have forgotten what the steps are, or forgotten what the implications of running those steps are, probably because they have documented it somewhere and don't look at it for the whole year, and then they get to the year end and kind of go into a panic about what they need to do, or just basically to use the year end as an opportunity to implement new business processes in SAP and seeing what they can leverage. So I thought this would be a good time of the year to have this kind of discussion. Certain things that are necessitate having a good year-end process. First of all, if you have a poor close, you could have inaccuracies or audit issues with your information. Also, nowadays, there's a lot of pressure to meet shorter deadlines for reporting. Year-end processes are normally the same as the month-end processes, a little deeper because there's probably more information that can be analyzed at year-end because you have the whole 12 months. So there's more focus on your typical month-end steps as well as some extra steps which are only done for year-end. Some companies, there are some tasks that companies do monthly that other companies could do yearly. I can think of a few of them. Some are revaluation of foreign currencies. Some companies on a group level would do it monthly, but for other requirements, they do that yearly. Also, it varies from country to country. Also, if you have multiple ledgers in your SAP environment, you could have variation between how one ledger, which represents one GAAP adjustment or accounting principle, will do things one way, while another ledger will do it a different way. So in general, your company code should be set to productive if it's a new company. Set to productive means there's a configuration step that needs to be actioned on, where you can check a box in front of the company code to say that it is productive. A company code being set as productive means that certain master and transactional data will not get wiped out accidentally. Not from my experience, about 50% of companies have this box checked, 50% don't, because they either don't know about it or they know it exists but don't know exactly what the implications of having that are. So a good time to review that is at year end, and this can help you in the future year not to have any accidents with your data. Check your number ranges, which are created for new year. Some companies have number ranges set which are not year dependent. Some companies do have it year dependent, and it depends on business requirements and also country requirements. Some countries require that there's a reset of your number ranges every year. So if you're in a company that is either has a business requirement for this, or you have companies in different countries that have this as a legal requirement, then you have to make sure you check that it's set up correctly. Consider performing closing steps first in test and Q&A. So if you have closing steps that, for a couple of reasons. One, closing steps you haven't done yet, maybe due to introducing a new process in SAP, then I would recommend that before you do the year-end close in the live system, do it in the test system first. The second thing is that there are certain close processes that if you don't do it in 1 month, you will not be able to run it in a subsequent month. I mean, a typical one is with material ledger, which is you have an actual costing run, which is meant to be done every month, and if you skip 1 month, then you can't do the subsequent month unless you've done the previous month. Another one is depreciation postings with asset accounting. Same thing. You have to catch up each month. So a good time to catch up is at year end. And so that way, in the subsequent month in your test system, you can easily do tests without going back to redo all these transactions. If you could automate these tasks, that's even better. Sometimes it's not always practical to do so, but obviously automation will avoid manual steps and also ensure that it's done at the right time, and you can schedule some of these to run overnight. You also have to look at sequencing, and I'll talk about that later. Some tasks are dependent on other tasks, so make sure you get the sequences right. Nowadays, a lot of companies use what's called the closing cockpit, or I have it here, the financial closing cockpit. The closing cockpit is an enhancement on what I used to use when I started doing SAP, which is the Schedule Manager, transaction SCMA. That was a way to have a list of month or year-end steps, which you could sequence, automate, and get some kind of alert about when it's done or what the status is. The closing cockpit is much better than that, and the closing cockpit displays the tasks to process and monitor your closing for month and year end. It's helpful when you have several people involved in one process, and those processes need to be carried out in a sequential order. It's also helpful when you have a SAP environment which is in different countries with different time zones, but there still needs to be some coordination of the tasks that are carried out. If a closing cockpit doesn't need anything extra to implement, if you're on, I think, ECC 6 and beyond, you should have that. I think it is a very good tool because it helps you with automation, it helps you with sequencing, it helps you with alerts and emails, and there's various things you can do with it. If you have Fiori, it looks better and it has some extra functionality that can be used as well. So I would suggest that if you don't have it, I just take a look at the closing cockpit and see if it would help you to make your closing process for month and year end a little more streamlined and automated. The year end is the best time to carry out organizational changes. I mentioned this briefly earlier. There are certain things in SAP that you cannot change if transactions have occurred for that year. So the year end is a good time to look at those type of changes to determine if you need to make them. There are other changes like cost profit center hierarchy, profit center reorganization, which it's actually technically it's good to do it at the year end. And also from a functional side, it just makes it cleaner if you don't do it during the year and you have a clean year with this new structure. Profit center reorganization is something that came out with the new general ledger. If you change a profit center from A to B, you want all the sales orders, purchase orders, manufacturing orders, cost centers to be updated with the new profit center. This can be done at the beginning of any month, but obviously it's much cleaner if it's done at the beginning of the year. If you could time it so that it is done at the beginning of the new year. The same thing is with document splitting for the new general ledger. That's typically done around the year end. Also with changes to reconciliation accounts and one-off validations. So the year end is a good time to look at if you have any major changes to organizational structures that you need to make so that your new year, you start off on a clean slate and you don't have the data, some of the data with the new structure and some with the old structure. So in this next section, I'll go into the different year-end closing considerations by the different areas in SAP. Some initial checks that you can carry out. First is to check for any unprocessed IDOC. So you have any interfaces or transactions that need an IDOC to get processed. I would suggest that you check I can't remember the transaction code, but the transaction code for IDOC errors to make sure they're all cleaned out. If you have any held or parked documents, go into the transaction, I believe it's FBV0, and check that they are all processed. Check the consistency with operational systems and other modules. There are transactions in SAP that you can run that reconcile the general ledger with other modules, either within the FICO module or even with non-FICO modules. These transactions are not normally used because it is expected that SAP is an integrated system, so everything should reconcile. But I think as some people, particularly in finance, have discovered, that doesn't happen all the time. And I have been to clients that don't know about some of these reconciliation transactions and don't use them, and then we run them, and you find that there are some issues with tying the general ledger or FI with another module. So you can also ensure that the closing run is run for all ledgers. If you have multiple ledgers because you have different accounting principles you want to report by, then just remember that if you're carrying out year-end steps for one ledger, you also have to consider the other ledgers. Now, typically in a new GL environment, you have a leading ledger, and most of the transactions in the leading ledger flow to the parallel ledgers. But there are some transactions that should only be run in one ledger and not the other. And these transactions typically are what distinguish the gap adjustments or accounting principles of one ledger from the other. If you use special purpose ledger, SPL, which I think is being, I noticed that less and less companies are using this because of the new general ledger and some of the functionality that has been introduced by HANA. But if you still use special purpose ledger, also consider what the year-end steps there are. Obviously, with special purpose ledger, because you can tweak the ledger to meet your specific company requirements, there's not a one-size-fits-all. It really depends on what you're using special purpose ledger for that will determine what you need to do from a year-end perspective. Some obvious transactions that you should look at for year-end closing are your finance periods, OB52. In the SAP system, every month you do something with this table. You change it from one period to another. Most people know this table pretty well, most people in finance. Some don't understand what the second period bracket is for, and just for those who don't know, that's just in case you want to leave certain periods that are non-contiguous with the ones that you're in open. So for example, we're in November right now. You might want to open up December in a few days, but you might want to keep last year open, maybe last year December or this year March open for some tax or audit adjustments. But you don't want to leave a whole bunch of periods open between then and now. So that's just an option for you to use. Also, in S/4HANA, a third group of columns has been introduced to incorporate controlling periods into the finance closing period. So for those who don't know, in S/4HANA, finance and controlling have been merged into one. So there's a lot of integration. There's a lot more integration with S/4HANA between FI and CO than you would have in the typical ECC system. If you have fixed assets, certain tasks you want to carry out, capitalize all your AUCs, check for any incomplete assets. If you do periodic postings or transfers or retirements, check that those are done correctly. You can use the CORS list or transactions for any missing settlement rules, and make sure that you run your CapEx project or WBS settlements by the end of the year. With fixed assets, there are some transactions, I mentioned depreciation, which you will know if you miss something during the year, because if you try to run depreciation for November, if you haven't run October, you will get some kind of notification from the system. But there are some things that if you don't do them during the year, you don't necessarily know that unless you're really scrutinizing the financial data. So with those kind of things, the year end is a good time to catch up on that. Some transactions in fixed assets that are typically run is opening the new year with transaction AJRW, which just initiates the new year for fixed asset accounting. Completing the postings and running settlements and reports for the old year. And then when you're done with your transacting in the old year, you use AJAB to close the fixed asset module for that year. Also for fixed assets, if you use purchase order commitments or you use budgeting to determine how much you can spend on an asset, if you have commitments you want to carry forward, there's a transaction to do that, or any revaluations with fixed assets should also be checked and carried out. There are some consistency check transactions that can help you look at the fixed asset module versus the general ledger module and find out if there's any differences. This is one of those things that probably not a lot of companies will be familiar with. Some will be, but I noticed that it's not always the case. And then you run it and find out there's something you didn't actually identify during the normal course of things, and this report identifies them. When it comes to sequencing, for the most part, any fixed asset closing task should be carried out before you do your general ledger closing task. In the case that you need to reopen a year that was closed, there's a transaction OAAQ that you can use to reopen fixed assets fiscal year. I have a client I've done that for because they were going back to a prior year to fix all the tax depreciation issues, and we had to constantly use this transaction to go back to the previous year. When you do that, it still leaves the current year open, but it just allows you to post to the previous one. From a finance close perspective, the system carries forward the balance sheet amount to the next year and transfers the P&L to the retained earnings account. If you have multiple ledgers, you can have a retained earnings account for each ledger, and this finance close transaction is run for vendors and customers, fixed assets, and the general ledger. Okay. The transaction for carrying forward balances, what I noticed, just having been to several companies, is that not a lot of companies are diligent about running this. And the reason is because even if you don't run the transaction, you're still able to transact and report in the new year. However, when you notice that there's something wrong is when you look at a balance display report like FAGL B03 or in the old non-new GL environment, I think that was FS10N and FK10N, depending on which submodule you're looking at. But when you don't run it, you find that the line items for that for the general ledger or AP or AR doesn't tie with the balance reports. So that's where you know that something's wrong. There's also some other areas where you'll notice that the carry forward balance hasn't been done. One example I ran into a couple of years ago was the customer was trying to change their general ledger line item display and open item management. They were trying to switch it on, and there were problems switching it on because they hadn't been rolling forward their balances. So that's definitely something to look out for. In the general ledger, check that the bank statements are reconciled. Typically, that's done every month, or probably even more frequently than that. But once again, the year end is a good time to catch up and make sure it's all done properly. If you have recurring journals, accruals, or deferrals, you should post those. Any relevant postings that need to be reversed in a new period, you need to make sure those are carried out properly. The transaction SM35 is used for any transactions that have a lot of volume and are not posted necessarily in real time, and they go into a batch session. You might find some things hanging out there that you didn't know about. Typically, it's the technical team, like a basis team, that looks at this. But if you're in the finance area, you might find that some things are missing because they're held up in SM35 as batch postings, and they might have been several months back that you find out that happens. And if you have any suspense accounts, any accounts that should be balanced to zero, you should check that they are balanced to zero. Revaluation, when I talk about revaluation here, I'm talking more with foreign currency because there's different areas where revaluation can be used. You can use valuation areas to, if local regulations require that different exchange rates for the company code should be used versus the group. The year end is a good time to check that those are set up correctly and working correctly. You can revalue debtors, creditors, banks, typically your balance sheet items, as well as your GRIR accounts held in foreign currency. So again, for those who don't know this process, this is typically when you have foreign currency items in an account, but this foreign exchange rate between the foreign currency and the home currency has changed since those items have been posted to the accounts, and you need to post the adjustment difference to a foreign currency account and reverse it the next period. You want to run this transaction after all postings have been completed after year end, and for the most part, these postings are reversed in the next period. They're just periodic postings. For the GRIR account, there's normally a lot of cleanup to be done there. We've actually done at least one or maybe two webcasts just solely dedicated to the GRIR account. SAP has several tools to help to manage this account. The year-end is a great time to make sure that they are running correctly, or if you're not using them, that you should be using them. F.13 just matches off an invoice receipt and a goods receipt that match with each other and uses the purchase order and line item to balance to match them off. If you have items in your goods receipt account, now this one, not a lot of companies use it, but if you don't know about it, it's good to know about it, to know that if it's relevant for your business and for the country that you're in. In the GRIR account, which is typically a liability account, if you have items that are invoiced and not received, you can reclassify them to an asset account. And if you have items that are received and not invoiced, you can show those as liabilities. If you have quantity adjustments in the GRIR account, so the invoice quantity was different from the goods receipt quantity, or if an invoice hasn't been posted, even though the goods receipt was posted several months ago, you can use MR11 to write off those differences. You can also review the GRIR balances with transaction MB5S. When we did the GRIR webcast, I noticed a number of people didn't know about this transaction, so it's one that's good to know. For materials management and inventory, typically you adjust the prices, meaning you either roll the standard cost or do what needs to be done to get your prices relevant and updated for the next year. Typically, I see companies do this around October. They start around October, November. You know, if you're in the manufacturing industry, looking at your BOMs and your routings and recipes, making sure that's all in order and reflective of the new year, looking at your activity prices. If you're not in the manufacturing industry, it might be just as simple as, you know, what is does the price that you have in the material master, is it reflective of what it should be? Or does an adjustment need to be made? Okay, so that's typically done, and those prices, you want to release them or have them active for the first day of the new year. Okay. The other things that are typically done are doing an inventory adjustment at the end of the year, doing a physical inventory count. If you needed to do to change the price of your inventory to one for GAAP purposes, maybe LIFO or FIFO, there are tools in SAP you can use to do that. That's another example of a process that some companies I know do it every month and some do it only once a year. And in a number of cases, companies do this without knowing that SAP has transactions that you can run and you can use to help you do FIFO and LIFO. I mean, one is done through the material ledger, but even if you don't have it, there's balance sheet revaluation transactions that you can use. Okay, so just a flow here is to check that the pricing has been updated, then open a new period with MMPV, close your accounts payable or your other areas of finance, post any inventory adjustments, and run your reports. For accounts payable and receivable, you might want to look at posting customer interest. printing any balance confirmations or statements. You also have a reclassification transaction you can run for accounts payable and receivable. Also something that some customers run, some do not. And that's typically when you have a debit balance in accounts payable or a credit balance in accounts receivable, and you just want a one-off reclassification of those balances, which will be reversed in the future period. Same thing with long-term balances, and I mentioned foreign currencies and reversals as well. So some more action items for accounts payable and receivable. Analyze your one-time vendor accounts. With this, one-time vendors are not used. They were used more often when I started working using SAP. Nowadays, it's probably not as prevalent as it used to be, but it is worth checking your one-time vendor accounts and seeing if they're reflective of one-off vendors and customers, or if the vendors need to be set up as legitimate vendors which you will be transacting with more often. Check your bad and doubtful debt provisions. There's transactions in the accounts receivable module to help you to deal with those. Check any employee vendor travel expenses and make sure they've been posted or accrued. If you have things like IRS 1099s, typically the deadline is January 31st. And so that's typically a time that you look at doing your 1099s. There's a standard program in SAP to do that. There's a form attached to this program. You need to check that form and make sure that the year has changed to the year that has just passed, as opposed to the one before that. Because I've been in situations where the form is not dynamic, and something needs to be done every year to make sure that it reflects the year that you want to report. Also, check the age analysis reconciles to the general ledger. This was a test that, again, when I started SAP, we used to do that more often than now. Now, I think most companies are pretty comfortable that your aging report ties to your general ledger, but it doesn't always, because a lot of companies have created a custom aging report to satisfy their requirements. And anytime you create something that's custom, you don't have a 100% guarantee that it ties back to FI. So definitely something to check. On the sales side, these are pretty obvious. You want to check that any blocked orders are reviewed. You want to check that any SD documents that are held up because they were not posted to FI have been released. That's VFX3. VFX3, I think finance teams should check at least every month, because sometimes when someone in the SD billing department, when they create a billing document, the billing document and output can be generated, but the accounting document might have an issue, and not every person in the billing department would notice that there's an issue and report it to FI. But you would notice that if it hasn't gone to FI, then you have issues with your revenue reporting and other reports that are based on sales. There's also transactions to check that all goods issues and deliveries are posted, and the billing document is posted as well and not blocked. And if you have any intercompany sales, it's a good time to do a reconciliation of that. In the controlling module, if FI is closed, you can have your OKP1 transaction open. OKP1 is also a transaction that I would say it's 50-50 companies I've worked with that use this transaction. The good thing about OKP1 is that it allows you to leave certain transactions that are CO-only transactions. You can leave them open even if FI is closed. And unlike FI, it only gives you the option to close general ledger, accounts payable and receivable, inventory, and fixed assets. But with CO, you have about 50 different types of transactions that you can independently open and close, like assessments or primary cost repostings or overhead or WIP adjustments. Each of those you can actually you can indicate whether you want them open for the new period or not. So definitely a transaction, if you don't use them, might be worth looking at. I mentioned settlements when I was talking about assets under construction. Same thing with controlling. If you have any settlements like internal order settlements or even process or production order settlements, you need to make sure that they have been settled. Carrying forward cost centers, internal orders, and WBS commitments. If you have commitments in those cost objects, you want to carry them forward to the new year. The dummy profit center is probably not as used now than it was in the past. But if you do use dummy profit center, you need to take a look at it and clear it out, because the dummy profit center is a catch-all for any transaction that has a CO object, but that CO object does not have a profit center on it. So you need to look at that every month if you can. If you don't do it every month, the year end is definitely a time to do that. If you use new GL or if you're on HANA, the dummy profit center is not as important. In fact, I think the dummy profit center rule is typically turned off when you're in new GL and if you don't have the profit center ledger activated. If you are not on new GL or HANA, you can run KALC, which is a reconciliation posting between FI and CO. Again, another transaction that some companies know about, some don't. They didn't even know it existed. And KALC is a transaction that I have been familiar with since I started SAP. It just helps the FI module and CO module reconcile. So, for example, if you posted $100 to a cost center in FI, and in the CO module only, maybe using an assessment or distribution, you transfer that $100 from the cost center A to cost center B. In the CO module, that $100 in cost center B. In the FI module, the $100 in cost center A. And there may not be no problem with that, but you can set up a rule that says if those two cost centers, A and B, are in different profit centers or in different company codes, then the system needs to true up the FI module to reflect that $100 is in the profit center that's linked to cost center B and not the one that's linked to A. So that's what KLC does. It does a little more than that, but that's just a very simple way of explaining it. Also, if you do overhead calculations or assessments, distributions, or allocations, these are transactions that are typically run during the month. However, the year end is a good time to check that these allocations or calculations are reflective of what you want them to do. So the year end is a good time to check your distribution and assessment cycles, check your overhead rates. Were they accurate in the first place? When you look at, if you're on a standard costing module, you can look at variances to see how realistic some of these allocations and calculations are. And if not, it's a good time to change it for the new year. For all these overheads and assessments, distributions, and allocations, they're normally date specific. So even if you're in November, you can say, I want from January 2018, I want to start with a new rate, or I want to start with a new assessment or distribution or allocation cycle. I mentioned releasing the standard cost earlier, and if you're in the manufacturing industry, then you definitely, this is a good time to start making sure that all the master data that's needed to calculate your standard cost is accurate and there's no issues or errors, and it's reflective of what happens in production. I mentioned dummy profit centers already, and then if you use the accrual calculation, it's also a good time to check that the rules are set up correctly and they're being run. For profitability analysis, COPA, again, check your assessment cycles. If you allocate costs from the cost center to COPA, the year end is a good time to check that the allocations are accurate and they're doing what you expect them to do. And if there's any major change in your business and you want to reflect that change in the allocation cycles for the new year, this is also the time to do that. If you use top-down distribution, I know I have probably 50-50 the companies that use top-down versus not. If you do, this is a good time to look at your top-down distribution rules. If you don't, it might be a good time to look at what is top-down distribution, right? Is it something that that is useful to your business? And if it is, then you might want to think about setting it up for the new year. Top-down distribution actually can work with assessment cycles, because typically assessments, to do an assessment allocation, depending on how many profitability segments you have, it could churn through a lot of data. And sometimes you get a runtime issue with a COPA assessment, so you use a top-down distribution to help distribute those costs from a higher level to a lower level. And so that way you don't have to use your assessments to every individual profitability segment. Just do it to a higher level, like material group or customer group or something like that. There's a transaction KEAT, which you can use to reconcile costing-based COPA to SD and FI. This is an okay transaction. It doesn't give you a full reconciliation, but if you're looking at, onesie, twosie reconciliation discrepancies, this is good to see what's going on. Intercompany reconciliation. This is another one that I have heard from companies that they either didn't know it existed or they don't use it. I think if you have transactions flowing between companies in your organization, this is a good transaction to use to highlight any postings in one company that are supposed to have been posted in the other company. Offsetting posting was meant to go to the other company, but didn't go, and you need to make an adjustment. So if you run this transaction, there's a little bit of configuration that is used to set it up, and once that's done, you can run this, every month or as frequently as you want. Actually, I think you only have every month, just once a month, and you can see what the discrepancies are and remedy them. And you can actually even set up an automated email to go to the parties that are responsible for fixing the issues. In S4HANA, S4HANA actually has an enhancement to this reconciliation transaction. By the way, the transaction is FBI CR3, I believe, is a transaction to run. It used to be called F.2E, but it's a very good tool and saves a lot of time and hassle. S4HANA, I have a note there, by the way, saying the transaction BP is for business partner, for the trading partner between two companies. Because when one company does business with an affiliated company within SAP, the trading partner is the link between the two. So some miscellaneous things to look out for for your foreign subsidiaries. And your so to look out for if you have foreign subsidiaries with your own local requirements, and if you probably will use either parallel ledger or parallel accounting for this, and this is a good time to determine if that is appropriate to reflect the local requirements which are different from group. When you have parallel ledger, which is I think that is the best way to go as far as SAP functionality. It gives you a lot of flexibility for posting to a separate ledger based on GAAP adjustments and have a full set of books, a full reporting mechanism for your parallel ledger, but also be able to reconcile that back to your leading ledger. Okay, also look out for any HR or payroll postings that need to be made, or you need to make any adjustment or changes for the new year. From a reporting standpoint, speaking specifically of general ledger or financial statement reporting, look at your financial statement version. Make sure that all the accounts, there's definitely functionality in there to tell you if certain new accounts have not been assigned to your financial statement version. So take a look at that. If you're migrating to HANA, so some companies are using this year-end to migrate to S/4HANA, and just consider the implications of FICO merge. There's obviously no time to get into it here, but for those who don't know, FI and CO, I think, in a year or a couple of years, we'll stop using that designation for SAP accounting because it's all just one now, and that's actually very good, but it comes with certain implications, and that is that certain things that you did when FI and CO were separate, you now have to consider what does that mean if you're moving to HANA. Other tips, schedule as much as possible. I mean, things like MMPV, if you use MMPV, I don't see any reason why it shouldn't be scheduled. It should be open at the very first moment of the new period, whether it's the new month or new year, so there's no reason why that can't be automated. Consider using workflow and approvals. Most of the new tools that have come out with SAP come with some kind of approval or alert or email, so consider taking advantage of that. I mentioned the closing cockpit earlier in this session. What I like to tell customers is, even if you don't use the closing cockpit, at least have a checklist, and a checklist that has been distributed to all the necessary parties that are involved in doing a certain task. It's easier with the closing cockpit because of alerts and emails, but there's also, you can always email someone if you have finished doing your task, and you can you now have things like SharePoint where you can have one checklist in a shared environment that people can update when they're done. So there's other ways to do that, even if you don't want to use the closing cockpit. But regardless, you need to have an automated, sequential way of performing tasks at month and year end. If you can centralize some of your closing, like OB52 and MMPV, that would be great, because that would definitely make it more easier to close in a coordinated fashion and in a more sequenced fashion. If you don't use, there's another tool also rarely used by companies, at least from my experience, which is the accrual engine, which helps you to deal with various accruals that you could have in your company. But this is an SAP tool which I believe I don't think you need an extra payment or license for this. I think if you might need new GL, but I don't think it's a huge leap to have the accrual engine and start using that. So again, it doesn't mean you have to use it, but if you are going to make the kind of change that uses different functionality and changes the business process, this is the time you want to look at those kind of things. Don't forget areas that I haven't specifically mentioned, like some of these other applications that are part of SAP now, like SuccessFactors, Concur, Ariba, and all the other areas. I have a transaction checklist here, which obviously is just a slice of all the different tasks that you can do. But I think typically you have some of these in most companies, like foreign currency revaluation, posting adjustment entries, financial statements, document journals, and those kind of transactions, which are pretty typical. If you're moving to S/4HANA, just watch out because some of these transactions have changed. They might have an H at the end of them. Some of them are no longer relevant. Again, not too much time to go into this, but HANA, we've done several webcasts that go in depth on what has changed with HANA, and I know a lot of other companies have done that as well. So just look out for any differences in transactions if you're moving to HANA. Some S/4HANA differences, you could use central finance. Central finance is it's an S/4HANA environment that you can interface your ECC system into the central finance environment and perform your closing centrally. The good thing with central finance is you can interface not just ECC data, but also non-ECC data. So it's really central, regardless of what originating system it comes from. Another difference with HANA is that all ledgers are posted simultaneously, so you don't need to do asset periodic postings and consistency checks. The asset carry forward, asset is now part of the universal journal, so the asset carry forward is now part of the GL. And some transactions have been enhanced. So reconciliations between FI and CO or FI and COPA are no longer necessary. Okay, so now we are in the questions section, and I'm going to hand over to Susan to read out any questions that have been posted. Thank you.
Thank you, Paul. Yes, we are now moving on to the question and answer portion of our webinar. If you have any questions, now is the time to submit them using the purple Q&A button at the bottom of the screen. All right, we've got a couple of audience questions in here already. The first question is, when do you set up the GL account that F.19 uses? When I run it in test mode and look at the postings, I don't see any GL accounts.
Really? So the GL account is good. I don't know the specific transaction, the configuration transaction, but it's a good question. In order to do F.19, you need to set up accounts to take the entries that are liabilities versus the entries that are assets. So for those who don't know, F.19 is a transaction where you're reclassifying your GRIR account into assets and liabilities and then reversing the next month. So there is a transaction that you first need to set up to say, for any liabilities, go here. For any assets, go here. I don't have the transaction on the top of my head, but that question I will give you the transaction after this webcast. We typically send a couple of days after this webcast. We typically send the slides and the answers to the questions. So I'll include that in the answer.
Thank you. The next question is, since S4HANA is moving towards a soft close at the end of the month, does this also impact the year-end close?
The answer is yes. If S4HANA, for those who don't know, one of the goals of SAP with S4HANA is for companies not to wait till the end of the month to get relevant data. A lot of the transactions like settlements or even to some extent assessments and distributions, even depreciation, anything that you typically wait for month end to do, SAP is trying to bring that forward so that you can do it before the end of the month. That's what they call a soft close. It's soft because it doesn't necessarily say, okay, this is as accurate as we can get at the month end. It's not, because there's certain things which, just from a practical standpoint, you have to wait for, but at least you can get a snapshot. And so because they have brought that, pushed that forward for month-end transactions, even the year-end transactions, so instead of waiting till the end of December, you can, at some point during the month of December, you would have certain data and information you can report on, which typically now you have to wait till the end of the year to get. So the answer is yes.
Thank you. The next question is, regarding the close process we just reviewed, are the steps performed by a central department or do the function departments perform them, i.e. AR perform the steps or corporate accounting?
That's a good question, and it really depends on the company. So just to tell you from my experience, because I've worked with small and medium companies and large companies. For the small and medium companies, it's typically centralized, right? Some small and medium companies have either a central finance team that runs most of these transactions. So they don't let the AP, like we talked about F.19, GRIR reclassification, even though GRIR is typically an accounts payable / maybe purchasing functionality. But if you're running F.19, you probably wouldn't leave it to AP to do that, not even an AP supervisor. You'd probably want someone more centralized in like corporate or that works with finance reporting or analysis to do that. So typically with the small, medium companies, it's the central finance team that does that. Large companies are a little trickier because with large companies, depending on how many different divisions they have, depending on how many different countries they're in, it might not be practical to have everything done centrally. Even though I know that a lot of these large companies have competence centers or shared service centers that do this, sometimes the countries do things so differently. For example, some companies might say, we need to revalue to FIFO or LIFO, or we need to have foreign currency valuation done this way and not this other way. And it just sometimes gets so, it will get too complicated to have that centralized in one team. So sometimes you would have a more decentralized approach for larger companies in order for them to address the specific fiscal and legal requirements.
Thank you, Paul. Next question is, can you repeat the details regarding the GRIR reclass process?
Okay. So the GRIR reclass process, so once again, this is the F.19 transaction. In your GRIR account, you typically have two types of entries. One, you've received the product or the service, but it has not been invoiced. And the second is you've received the invoice. I mean, this is less likely, but it does happen. You've received the invoice, but someone forgot to do the GR for it. So if you think about it, the first part of this will have a credit in the GRIR account, but no debit to match it off to. That's a legitimate liability, right? The second one, you have a debit in the GRIR account, but no credit to match it off to. And that should be an asset. If you left all that in the GRIR account, it may not be that reflective of what is really a liability, because your GRIR account is shown in your financial statements in the liabilities part of your financial statement, but really you have some assets, or call them prepayments, in there. And this is a way to kind of carve out those assets, separate them from the liability, and temporarily report them in the right area of your financial statement. Again, it's just for the end of the period. The next period, you reverse it. So that's what that process is about.
Thank you, Paul. The next question is, could you please mention the transaction for reconciling intercompany again?
So reconciling intercompany, so again, if you're reconciling intercompany, that means that you do sales and purchases between affiliated companies which are in SAP, right? Now, in order for you to, in most cases, when you do these transactions, they all happen at the same time. Maybe you do a intercompany billing document from one affiliate company to the other, and you have this IDOC process set up so that the payable is also created when the billing document is created, right? So that happens seamlessly. Sometimes the IDOC fails, by the way, so you don't get you get one side and not the other. And sometimes it's not an automated process. You know, this is something you know it's in a company. You booked it to one company, but the person in the next company didn't book it. You have a mismatch. So the transaction in SAP to kind of highlight these reconciliation differences is F for Frederick, B for butter, I for India, C for Charlie, R for Roger, then 3, FBICR3, right? However, if you've never run this before, don't think you're going to run it now and it's all going to give you information. There is some configuration to be done in order to set this up. In fact, there is. It's not that much, but you need to have that set up in order to have this run. Okay, so it's FBICR3, or the older transaction, which I'm not sure is still being used, is F for Frederick dot 2, the number 2, then E for egg. So it's F.2E is the other transaction, the older one.
Thank you, Paul. The next question is, if you use MR11 transactions, will it affect moving average price, and will the price adjustments need to be done after this is run?
Okay, so MR11 is the transaction to adjust to write off any quantity differences or any quantity differences between an invoice receipt and a goods receipt. It's also used if you had a goods receipt or an invoice receipt that happened months ago, but the offset never came in. You know, maybe you had a goods receipt months ago and the invoice was paid through FB60 and it didn't go through Miro, right? So if that's the case, you use MR11 to adjust it. Now, the rule is this. If MR11 is done for a material at standard cost, that adjustment is going to go to the price variance account. If MR11 is done for a product done at moving average, that adjustment goes to the inventory account and does update the moving average price. Okay?
Thank you, Paul. Next question is it necessary to close the period using transaction OKP1 if you have already done so in OB52?
Okay, so OKP1 is the transaction to close the CO period. Again, this is the one that I said not many companies use, maybe about 50-50. So the answer to that question is this. Do you do any CO transactions that don't generate an FI document? The example is an assessment, right? You're allocating costs from cost center to COPA or cost center to cost center. Or perhaps a settlement, but a settlement that doesn't go to the GL. You're settling an internal order to some other object that's not in the general ledger. If that's the case, OKP1 just gives you more flexibility. Because if you close, for example, November, then OKP1, you close November with FI, you can still do stuff in CO without being impeded by the FI closing. And then you can use OKP1 only when you're ready to close CO. Or even, like I said, what is good about that transaction is you could say, well, some of these transactions in CO are FI dependent. I do want them closed. Like you could say, well, if to settle a production order, that is kind of general ledger. It affects the general ledger because the postings go to the general ledger. So we want that closed along with FI. But to allocate costs from cost center to COPA doesn't affect FI. I want it open. So don't think of OKP1 as restricting you from doing something. It really just allows you to do more things that the FI period close doesn't impact. And then when you're ready to close OKP1 at some point, you can do that without even affecting anything in F5. Just to give you an example, I'm not saying anyone should do this, but you can have you can be posting, you can do a CO posting from January right now in November, even though FI is closed, because sometimes CO is used more like a analysis, not necessarily legal reporting, so you have more flexibility there, and that's what OKP1 provides you.
All right, so now we are at the end of our webinar. Paul, would you like to leave any last comments?
Well, thank you very much. I hope this was useful. It's hard to to have this kind of session with different companies with different requirements. So I can't say I've satisfied everybody with everything I've said, but I hope that everyone has something to take away. I know that there's more questions we probably haven't answered just based on the timing, but we definitely, if you've attended any of our webcasts, we make sure that we not only send you the slides, but we send you the answer to every question asked. So expect to have that in the next few days. Thank you very much.
Yes, and thank you, Paul, for a great webcast. On behalf of ASEG, I'd like to thank ERPfixers as well as all of you who took the time out of today to attend this webcast. With that, I'd like to close the webinar. Just a friendly reminder, the recording and slides from today's program will be posted to the ASEG website, and all registrants will receive an email with the link to those materials. And with that, I'd like to close today's webcast. Have a great rest of your day, everyone.